Hello and welcome to Donatien Investment. This analysis is for Enterprise Products Partners LP on the New York Stock Exchange as of 31st of July 2026 with a share price of $37.85. The full report is on donatien.ca. A hold now at $37.85 on the short term. Enterprise just posted a record quarter, but the units sold the news and sit near their 52-week high, so there's no entry edge today. This is still a top-tier fee-based income compounder with a well-covered growing distribution, and the medium and long calls are both buy. Accumulate on weakness for the income. Enterprise moves natural gas liquids, crude and petrochemicals through roughly 50,000 miles of pipeline, and the great majority of its margin is fee-based. It earns on the volume flowing through, not on the commodity price. That makes its cash flows unusually steady. Quality scores 74. The distribution yields about 5.9%. It has been raised every year since the 1998 float, 27 straight years, and second quarter cash flow covered it roughly 1.7 times. That is elite coverage for an income vehicle. On the 30th of July, Enterprise reported record quarterly earnings before interest, tax, depreciation, and amortization of $2.86 billion, up 17% on the year, and earnings of 84 cents against about 74 cents expected on record pipeline and marine terminal volumes. Management flagged a roughly $3 billion growth capex plan for 2027. The balance sheet is investment grade, A- rated, net debt about 3.2 times cash flow, interest covered 5 times. The volume thesis is intact, and the print confirmed it. The one thing missing was a price reaction. The units actually slipped. The medium and long calls are both buy, and it is worth being clear why. This is not a bet on a big re-rating. Valuation is fair, scoring 63. Clean price to earnings is about 13 times against a 15 times sector line, and the cash you actually collect is a well-covered distribution near 6% that grows every year. The unpriced upside is volume, record liquefied natural gas exports, and the coming wave of gas-fired data center demand feed Enterprise's molecules. Last week, the medium and long signals eased from strong buy to buy. Nothing broke at the company. The macroeconomy legs simply cooled to neutral, so the amplification faded. The risks for a fee-based pipeline are modest but real. A demand recession that cuts throughput volumes is the core one. This is a volume story, so watch the flows, not the oil price. A sharp rise in long-term interest rates would derate a yield vehicle like this. The 10-year already sits near 4.7%. And it is a master limited partnership, so it issues a K1 tax form and carries the usual structural quirks. In the bear case, the units fall to about $32, roughly 15% below today, but the distribution is covered 1.7 times, so you keep collecting a near 6% yield while you wait. This is a drawdown risk, not a solvency one. Now weigh the risk against the reward. The bull case is roughly 22% above today. The base case, the most likely, about 8%, and the bear case, a fall of about 15%. So you are risking about 15 to make 22. So, our call on Enterprise Products Partners LP on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.